Hey, what's going on, guys? It's your boy MC Fire coming at you with an awesome video today. Basically, a market recap for the week. We definitely did a lot of sideways action. Didn't see any big booms or busts. Didn't catch any really big fish, but we did have some of the plays work out. Some of the plays, as you'll notice as we break it down, they went against us, but because we had an asymmetrical position on, we weren't too sure about it. That was like the perfect setup for a play not to actually work. So we're gonna break down some of those plays, give some highlights for this week, and maybe some to dos for next week. Again, this is not financial advice. You guys trade how you want. No longer, I'm not a financial expert, but what I will say is, I love talking about this stuff. Absolutely love the art of trading and watching your wealth grow in a meaningful and methodical, disciplined way. And so, watching the best do it is definitely how I want to do it because I want to emulate those guys. So, let's get right into it, man. I hope you guys are enjoying it. So, here we go. So, what we have here is Charles Schwab. We did take a position this week on Charles Schwab a couple of days ago. The reality is we saw a very, very clear, defined buy signal. Charles Schwab is in a very strong uptrend, indicated. Now, I don't know how you guys classify uptrends, but I classify them very simply. There's clear criteria for an uptrend: strong uptrend, downtrend, strong downtrend. In this case, we have a strong uptrend. 21 period moving average is going bottom left to top right. It's going up, and then price action is in general above the 1 ATR section of that 21 period moving average. So 1 ATR, if the price action is really above this blue cyan line, which I've denoted as 1 ATR, then you're in a strong uptrend. If it's inside of that, you're kind of in a relatively weak uptrend. Still an uptrend, but weak one. But right now, we tested the 21 period moving average and we continued our trend. If you guys have been watching our setups, I typically take a weekly setup because I like to stay in moves for about 3 weeks to multiple months. And it gives you the best position to fire and forget. You do have to manage it a little bit. That's what you see the alerts here for. We're looking to either roll or let go of the position as it trades back down to the 21, below previous week's low. So Charles Schwab as a play. Why did we choose Charles Schwab? Basically for the fundamentals and the wins at its back according to the financials. It is slightly lagging, but it was in a good position to push. So we're looking for something kind of like what we see here, a break above the 8 and a break above previous week to go ahead and push for the next 3 weeks. And very similar to the way we got our alert up here, it starts approaching those highs and around that third week. So let's say, for example, if you bought it here or here, you're looking at 3 weeks, 1, 2, 3, and maybe even roll it for that breakthrough or breakout where you'd be looking to take off a little bit, roll it, whatever, for the next 3 weeks, close it, or set up for more time, staying in the uptrend as long as possible. So it's just one of those things to think about. We're trying to stay in trends optionally wise as long as possible. Whether you guys want to buy premium or sell premium, it's kind of up to you. But for me, I like the verticals. Um, and those are where essentially where you buy a closer in the money or slightly out of the money option. You're buying that and you're selling a out of the money option for a buy as well. So buy to or sell to open, I should say, a more out of the money option. Okay. So we did that. We set up a vertical for Charles Schwab. We'll also break into Meta, which we did the same thing. These are to the upside. So we did get a position in Meta. It did see some significant move to the upside. Um, let's see here. We'll go to the monitor tab and see where we actually got that puppy. Let's see what day. Here's Meta right here. Open it up. We have some shares. We'll look at when we actually bought the thing, view trades. So it was a ball on the 5th at around 8 o'clock. So we can actually go mark that up on our charts. We'll go here, flex grid. 5th and around 8-ish. When did it say? We'll go back. This way, you guys are literally seeing as we go through this how we kind of categorize and chronologize our trades just with these arrows. Makes it pretty straightforward. But at 8:37, so we go back to our charts tab here. On the day, 8:37, about right here. Cool. We'll change that to green. Why do we do it like this? That way we just have a nice visual level for where we actually enter the trade. And sometimes if things get really convoluted, I'll come in, I'll do a drawing set, put a line there right where we entered, and change it to green so that when we go on the weekly, I don't have to find the arrow. You just kind of know where your position entry is. And so you can see up right here. So Meta made some pretty big strides. Um, what's What's funny is I've been noticing that our hippos have been pretty accurate, which is our pre-market hypothesis. Um, and because of that, you know, you'll see it here as we scroll to the right a little bit. This was our entry, nice juicy pullback here for Meta, and ended up pushing out of that very nicely, extremely nice. And our position to actually take the first roll on Meta, we missed by literally 10 cents. So we put the alert here, didn't quite get it, missed it by 10 cents, and it kind of pulled back on us a little bit. Retested that and came back down. My thing is, it's still currently profitable, but we have it for 3 weeks. So what would you say? Like, oh man, your plan didn't work out. Well, that's kind of why we bought it for 3 weeks. We wanted to. If you see this move right here, I'm looking at it as there's increasing buying pressure. That's one confluence. Confluence number two, if you're a technical analysis and you use moving averages, it's a nice juicy squeeze right here, and then it just broke above this tight rotation. So that's confluence number two. Confluence number three is if you're inside of an upper rotation, its ability to hit fair value, it did that and come back here. If it gets a bounce, we can see it hit fair value in complete rotation. If it doesn't get a bounce, it'll break, and we know what our stop loss is. It would be the low of the previous move. So it's just one of those things where it is what it is. If it completes the rotation, we'll take the hit on that. But the reality is we got it for 3 weeks. We don't know what's going to happen, so we'll see. That's the Meta recap. So far, it's been one of our better performing plays. I will say this though, talking about the hippo, we did. It felt like we're feeling the market. Now we didn't put this in any of the videos, but take my word for it. Uh, today and yesterday were definitely wins for our understanding of technical analysis and how it's breaking down. So um, we're looking at XSP, which it's off of the it's basically futures, mini futures off the spot. Okay, and so for today, I my hypothesis was, well, let me get rid of this here for you, but that's basically where our butterfly was. I think at the 36. Yeah, at the 36. Cool. So remember that level. As the market opened, right? The market opened, pulled down. Now I was thinking, I was like, okay, nobody wants to buy the highs. Now, why are the highs here? Isn't really because of this wick candle. It's actually because of the pre-market wick candle, SPY. We'll go take a look at SPY. Now, if you go look at the SPY, you'll see who wants to be that guy to buy highs, right? Who wants to be this guy? So pre-market, it wicked up to this level, and that's kind of where that's where your resistance is. So my thinking was, okay, it pulled all the way down, tested the low, and then as it comes out, it probably will pull back, but there's a good chance that the market will test highs again. If you tested the low, you got a nice bounce even at pre-market. My inkling is, okay, you tested the low. If you didn't break it and you're bouncing, you're gonna go to fair value. That's the thinking. But As soon as the market opened, it pulled back slightly as we anticipated. Then we put on the XSP position. It didn't end up going in our favor. We put a trailing stop of I think 50 or 70%. I can't remember the trailing stop, but I know it got executed. It got a nice, juicy profit. We didn't have to do a whole lot of monitoring or anything like that. We just, as it started going our direction, we were able to take it off in good manner. Let's see, it might be in the working orders or nope. So I think they already rolled the orders, so I can't show it to you. But yeah, that's exactly how it played out. So apologies for that. I can't show you exactly how the XSP trade worked out. But if you notice, it went in opening, went down, and around this level, as it starts pulling back up, we place the butterfly, basically call butterfly, with its low strike right here at 536 on the XSP. Excuse me. Let's go back to what we're actually on. So yeah, 536 on the XSP, which put us roughly $1 in the money, right? So because it went up that far, and it had a lot of time before expiration, at least on the day, we put the contract on for just a little over $50, pulled out $80 per contract. So that's a pretty good return. It wasn't like the 100 to 200% that we're used to seeing on these winners, but the fact that we got a decent gain on a very choppy day, I'll take it. Take it all day. It's a good time. One thing I will say is if you notice here, you'll go to right here and start pulling this out. So shout out to S&B Capital. You guys are going to get flashbangs, so just brace. I'm about to throw a very white screen up, so it's a little bright. But if you notice, S&B, shout out to them. No by any means associated with them. They're not getting a plug for this. They put out a free training, and included in that free training was four of their major setups. Excuse me, five of their major setups. One of which was the rubber band. So I noticed that you had something kind of like the rubber band play out on the SPY today, and you'll see that here as it pulled down this candle that came in, wiped out all of these candles and then some. So my thinking is, okay, even the whole moving average goes green the candle before, but this candle is just wiping the floor with all these other candles and actually goes to the opening price. So from there, I would have felt very confident in taking that trade. If you notice, the instructions say to put up a 9-period EMA. So we'll put that. We'll put a moving average exponential up, and we'll make it to 9. There it is. What color are we gonna make it? I guess it doesn't really matter, but we'll make it cyan. We'll tell apply, right? So in the manner, without even like necessarily knowing that it was there, this candle showed a lot of promise. I'll pull it back up for you guys. Put it right there. So this candle right here showed promise, and it crossed above the 8, right? So you take your entry at the break. You take your entry really at the break of these three candles. There's your entry. Break these guys right kind of around here is your entry, and then your exit is 1-to-1. So you'd be taking on your first contract right around there, your second contract at a 1-to-1, and then at VWAP. Now, because things are very tight, the VIX is actually very, very, very tight. Taking it off at VWAP necessarily isn't the most profitable, but it is the smartest thing to do. I will say that. It is by far way smarter than trying to hold it and getting it to go to the opposite end of the 2 ATR, right? Because it's actually making that move at VWAP. So you would be taking that little dip at VWAP on a SPY as it breaks. We'll zoom in here. As it breaks in a major way up here, you'd be taking that contract. You'd be taking that execution, and then you're looking for a 1-to-1 that'd be up here. And if it keeps going, you probably pull it at 2 ATR, kind of modifying it It's not exactly the play, but you see the initial entry setup. That's really the trigger to get in a trade, whether it's down here or here. After a major pullback, uh, elephant candles, enlarged green bars, completely trapping sellers here, and then kind of running it up to the 2 ATR range. You can almost hold it until you get a whole moving average cross or some major pullback because you're not even close. Like I wouldn't try to let it go here, but letting it go here kind of makes the most sense. You're hitting the resistance level of pre-market highs set here, as well as you're definitely in the 2 ATR territory, and you've got a trigger on your whole moving average. It just makes sense that you let it go right there. So if you were day trading, that's exactly how I would have day traded it. Looking to take advantage of some of that volatility in that move, but you see it and you execute it accordingly. Once you see this candle, it was kind of a no-brainer. Once it crossed, especially after it crossed the high, slight pullback, but it reapproached that. You take that trade, stop out at the low. Very simple stuff. We also want to take a peek at two other plays, and then we'll call it. So CCL, one of the plays that we took, and we showed you guys Schwab, but really CCL, also a pretty decent push from where. So this is the entry from where we put about 4 days ago. It did push, but it hasn't really made any headway since then. Now, what I did notice is I'm not really a big fan of writing your own trend lines, but it is sometimes good to know to see, hey, there could be potential selling pressure here, or it literally could just be rotation, right? It could be just rotation. It's milling around in fair value. But what I did notice that's pretty key is your unbalanced volume is increasing. Your trend is actually changing. And so even if it goes to rotation, pulling it off at highs is probably a safe bet, or at least rolling it at highs. So if you had tested fair value twice, you didn't really want to complete the rotation. You tested fair value twice. So I felt comfortable taking this trade, at least to the upside, temporarily. This is a weekly execution, so where we pull it at the lows. We already had the alert there. But where would we want to start taking some off or roll it at 18.99? It's a play a little over 2, maybe 3 to 1. But as it pushes out of this range, it's not necessarily a fundamental play that I'm looking at. It's just technical rotational play that we could see potentially paying out in the next 2 to 3 weeks. Now, this is really the key takeaway that I want to get you guys to understand. On plays like, let's say, what we just did for Meta and CCL, they're different because there is there's multiple confluences for me to say, hey, I'm going to take this trade versus this trade, right? The confluences for CCL and Meta were the ascending triangle. This was a double bottom, right? And a buy trigger. Those are like multiple confluences. In Meta, you saw the ascending triangle, right? But we're going to go to Amazon, and we took a gamble, and it was a gamble that did not pay out. And the way we set it up made sure that because we didn't have multiple confluences, this necessarily wouldn't hurt us too bad. So we did put a butterfly to the downside on Amazon. The butterfly spread would be it right here, like in this rotational zone. I will highlight that for you guys. We'll put it right here. So the butterfly was like down here, slightly higher, yep, right there. So center strike, imagine that center strike, high strike, low strike kind of deal. Didn't necessarily think, well, if Amazon gets down into the zone, it's probably going to settle in here. So let's go ahead and put one there. Don't think it's going to get down there, but the market was there was a lot of conflicting news coming out, and because of that, I was like, hey, Amazon, if it does come down this way, even race down this way, we could see potential profits. Very similar to this week. If it did, I'd be looking for a nice juicy windfall to offset some stuff. So I was definitely looking for that. but I put it on asymmetrically so it wouldn't cost us too much. Nice juicy put butterfly. Didn't work out. Didn't lose too much. Nothing to write home about for sure. Did trade up. We do have shares of Amazon, so that's what I was saying. It's really to kind of offset some of that, some of those shares that might be going negative. So we wanted to do that, but Amazon pulled through, completed its rotation. Actually, it reapproached its 187.36 level. It's not all-time highs, but it's getting up there. It's one support level below all-time highs, being at 191.70. So definitely excited about the market acting like he wants to push. But again, nobody wants to be the guy that's buying new highs unless you know for sure or have like mightily conviction that it will go extremely higher in the future. When I look at this, I just see it's a little extended to the high side, and would want to like buy it back here at some point, or even if you take it down, let's say you go down, narrow it down to the daily, even if you got in a little late. Again, this is where you want to buy on that weekly. But even if you got in on the daily, you'd want to get in about 5 days ago, right here. So on the third, you'd be looking to execute a trade. As it broke here, broke above the 8 period moving average, your stop out would be maybe the low here, maybe the low here, depending on your risk tolerance. And you take it a couple of rotations. So this 3 day play would have been you basically be pulling it off yesterday. Perfect play, perfect execution. But I wouldn't stay in these plays too long, especially if you're running them for options. Now, we probably tomorrow or the day after, we're going to be dropping a couple plays on things we're going to be doing to look at some more fair valued investing, investing for dividends, and investing for things that are going to be rotating. Definitely going to be rotating into a juicy position in the near future. Actually, we'll pull this over here and pull it up for you because I'm noticing that not a lot of people are looking at other parts of it. They don't get a lot of headway or headwinds in the news. And if we're going to be professionals or try to do this to the best of our ability, definitely looking at where there's certain weaknesses in the market that has a lot of potential for strength would be pretty good. So here we go. We're going to pull up the bar. Oh, excuse me, it's my favorites. Yeah, cool. And bear with me, guys. There we go. So we're going to take a peek at sector rotation. And in our sector rotation, we definitely want to determine where the juicy spots that could potentially and outperformers in that section. So here we are. We'll just go full screen here. So here we are. If we're looking at bar charts, we see out the gate at the end of this week, the market is kind of in a mixed bag here, right? You've got communication services at the peak of its game, but not necessarily tapered off to the upside. Infotech has tapered off to the upside. Materials, kind of same thing. That's the purple line. But then not really much going on. Like you got SPY kind of going neutral, industrials going neutral, and then everything else kind of doing its thing. Real estate's bringing up the rear. And one thing I know about XLRE and real estate is, yes, it is down right now, but if you have any faith in like real estate or not, it will recover. Barring what most people believe is actually going on, people will say real estate is all-time highs. But what I've noticed is I watched a video of a gentleman. He broke it down in a different way. He said if you price the average home to the price of gold, which is what I classify as real money, real value, he said actually houses are down 20% because gold has risen so high. It's the pullback in the housing market is technically already started. It's already started because nominally and actually, people have actually started asking less for their houses. People aren't coming in $10,000 over asking. So, is it a good time to just jump into real estate? I would say that, but XLRE is a very good spot to kind of dip your water. We were looking at Me and Q have been looking at REITs, in particularly, and you know what they say, buy low, sell high. But in the practice, most people don't actually do that. They do the opposite. They see things, FOMO it out, want to buy new highs, want to get in on and tell their friends, hey, I bought Nvidia at near highs, and I made 10%. Well, awesome for you, but what we want to look at is a more unique approach, a more practical approach. And if you believe that real estate isn't actually going anywhere anytime soon, great. But right now, if you're looking to get a deal on something, this is the area where you look to get a deal. Now, I say that mixed bag, right? You definitely want to still wait for a trend change, buy things, all this other stuff. But for us, we felt like it's comfortable for us, for the risk to the reward, to go ahead and start averaging into position now. And what's unique about real estate is a lot of their holdings offset via dividends. So it's just something to think about as we were looking to break down our portfolio. And do we want to average in more at highs, or do we want to find things that's juicy that while it's going sideways can continue to pay out juicy dividends because it is at a great value discount. So those videos are to come on how we're going to be establishing more of those in our positions with REITs and dividends in certain value areas where nobody's looking at. Because I do believe there's actually been about a 20% drop in the market. It doesn't reflect in prices on the street, but compared to the price of real value, it actually has dropped. And then when you look at Zillow and Redfin, houses on average past the 3 week mark are starting to be pushed out further before they actually get some potential buyers, and people drop the price on those pretty consistently as it goes through. So if they're basically what it's saying, if houses aren't getting scooped up almost immediately, there's a chance that they could be on the market for 3 to 6 months before they even get an offer. So that if you're on the sidelines looking to buy a house, is good news for you. If you're someone trying to sell your house, that just means that you might have a better job bidding low and hoping bids come in that bid up the price to what you want. So it's just this is the market that we're in, but we're looking at sectors like this, seeing that while the rest of the market has been moving upwards, this sector has been trending down and even trending sideways. And this is a good opportunity if you get a nice average in. Let me show you before we pull out. Let me show you QILG. What sector we really did that pretty efficiently. So, and I'll break this full screen because I want to just kind of drive the point really kind of home. So me and Q, we definitely wanted to do the same thing, just in the queues. Now, when everything was being sold off, we looked at each other and were like, yo, this is our opportunity, right? We're basically given a free opportunity to get into the technology sector with something like QILG. Um, and so we wanted to do that. And what's unique, what's so crazy is uh, typically on a downtrend, we buy when price is away from the moving averages. On the uptrend, you want to buy when it's kind of tight with the moving average. So you're buying the dips. On the sell side, you want to do the opposite. You want to buy the big dips, right, away from the moving average. That's the best time to buy. When you look at it, that's kind of the best time to scoop it up. You're what they call catching and falling knife. Now, if you notice, I will draw out kind of where we bought so that you guys can see it. Draw it out here, boom, and draw it out here. These are kind of our average prices where we kind of really made headwind. So I'll mark these green. And what I want you guys to notice is that market forward and towards the uptrend, and we'll see where it actually intersects where you would uptrend at. So even though we were shooting in the dark, because we found that the risk was tolerable, we wanted to take the play. Now, if you notice, we bought here, here, and here. Awesome. Now, let's say, for example, we held and we waited for confirmation, we waited for the uptrend. Look at where these green lines intersect your uptrend. Those buys would literally intersect where you would be buying anyway on the uptrend. I want that to sink in. Where we bought almost 6 months before this push, we were buying these huge dips because we were like, hey, yes, it is going down. We have like a 5 to 10 year approach to this. So is this a good position to buy as relative to highs, right? Is there a 3 to 1 risk to reward ratio overall in the portfolio? Yes. Is it you're not just buying to be buying, you're buying in a key position? Yes. And then in hindsight, that's amazing. Now it's not always going to happen like that, but if you notice where we were buying was at 24, 23, and $23. The high was 34 too. So there was $10 of movement to the upside, roughly. And then when you look, I mean, it could have went lower, but bottom out to 2106. So you're looking at basically 2 to 1 kind of deal. That's 2 to 1, maybe 3 to 1 kind of deal. When you look and you play it out forward, not only were you getting whatever revenue QILG was generating in this time frame, but your buy position was relatively in the same spot you would have bought in the uptrend had you taken the initial buy, the initial dip. You might not have taken this first aggressive cross, but this break of trend, retest, and then confirmation, you are almost definitely taking that right where we were buying previously. We don't have a crystal ball. There is no special formula, but I show it to prove to you that sometimes it is okay to buy when you feel comfortable of taking proper risk to reward before you play things out forward. So I appreciate you guys' time. Thank you for joining us. If you're watching the channel for the first time, we have plenty of other videos. And if there's something that you want us to break down on our journey, we can definitely do that. Like you want us to show you, hey, how do you make these lines in your chart? How do you get these certain setups? We got you. That's what we're here for. And also, we appreciate it if you guys hit the subscribe and the like button. It helps out the channel a lot. We love doing this, so we're going to do it anyway. But if you like it, it just lets us know how close we are getting to you guys. Are we meeting any of your needs? If we can grow in both capacities, we're doing that for sure. So thank you guys. I appreciate your time. Have a good day and goodbye.